Hey everyone, welcome back to Corporate Decoder, the place where we untangle the complicated financial world of big companies, or in this case, a bank holding company. And let me tell you, this latest report from BANK7 CORP has some interesting numbers that might surprise you. A bank holding company based in Oklahoma with branches in 3 states has just filed its quarterly report for the 30th of September 2025. We are going to dive into their financial health, see how much money they are making and what could be a cause for concern, all explained in super simple terms. And if you like getting clear insights from these financial documents, make sure to hit that subscribe button and turn on notifications. Also, if you want to connect with other finance enthusiasts and get more exclusive content, check out our Discord community. A link is in the description below. BANK7 Corp has total assets of over $1.8 billion. That is a pretty big number, showing they have a lot of stuff and money. Now, compared to December 2024, they've seen an increase of more than $150 million, which is about an 8.7% jump. This means the company is growing and acquiring more resources. Shows us where all that money is. On the assets side, a huge chunk of it is in loans, about $1.5 billion after accounting for potential losses. That is their main business, lending money out to people. And businesses, they also have a good amount in cash and deposits, with other banks around $256 million and investments in securities totaling over $54 million. On the other side of that balance sheet, you have liabilities and shareholders' equity. Deposits are their biggest source of funding, with over $1.6 billion. This is the money people and businesses have entrusted them with. They also have their own equity, which is about $241 million. This is the bread and butter for banks. It is the difference between the interest they earn on loans and investments and the interest they pay out on deposits. For the third quarter of 2025, they brought in almost $23.1 million. That is up from last year, which is good. But if we look at the first 9 months of 2025, their net interest income was about $65.6 million, a slight increase from the same period in 2024. Now let's talk about the yields and rates. The report mentions that the yields on their interest earning assets totaled 7.43% for the last quarter. That is down from 7.92% last year. This is mainly because the interest they earned on their loans dropped by 0.5%. This could mean they are lending money for less, or perhaps the types of loans they are making are lower yielding. Their total interest income from loans was almost $87.2 million, a decrease of about $2.6 million or 2.9% from 2024. This is because, as they mentioned, loan yields went down. This is something to watch because while overall net interest income went up, income from loans specifically dipped. This is income that doesn't come directly from interest. Think of it as service fees, mortgage lending income, and other stuff. For the third quarter of 2025, this was about $2.2 million. That is down from $3.7 million last year. A big reason for this drop seems to be income related to their oil and gas assets, which they mention in their notes. This part of their business is quite specialized and seems to have had a down quarter. This is pretty much all the costs of running the bank: salaries, employee benefits, furniture, equipment, rent, and so on. For the third quarter of 2025, these expenses were about $10.4 million. That is up by about $1 million or 10.1% compared to last year. A big part of this increase is salaries and employee benefits, which went up by almost $500,000, a 9.3% increase. This suggests they might be hiring more people or paying their current staff more. It's basically a pot of money set aside for loans that might not get paid back. As of the 30th of September 2025, this allowance was $19.4 million. That is higher than the $17.9 million they had at the end of 2024. This increase in the allowance is directly tied to the growth in their loan portfolio and is a sign that they are being cautious about potential defaults. The provision for credit losses for the first 9 months of 2025 increased by $700,000, which they say is related to loan growth. Now let's look at the loans that are actually in trouble. As of the 30th of September 2025, their non-accrual loans, which are loans where interest payments are significantly delayed or uncertain, were about $5.3 million. This is down from $7.2 million at the end of 2024. The ratio of these problem loans to their total loans is also on the decline at 0.35%. This is generally a good sign, showing that their loans are performing well and they are managing bad loans effectively. This gives us a snapshot of when their loans were made. For loans originated this year, they have $31.7 million in construction and development loans and over $235 million in commercial and industrial loans. This shows they are actively originating new loans across different categories. When we look at their capital ratios, these are super important for banks. They measure how much capital a bank has compared to its risk-weighted assets. BANK7 CORP. and its bank subsidiary are well above the minimums required to be considered well capitalized. This means they have a strong financial cushion to absorb unexpected losses and can continue operating smoothly. Now, for my take on BANK7 Corp based on this report, they seem to be a growing company with a solid foundation. Loan growth and deposits are up and their capital position is strong, which are all positive signs. The slight decrease in loan yields and the drop in non-interest income from their oil and gas assets are things to keep an eye on, but they don't appear to be major red flags right now. The increase in their allowance for credit losses is prudent given the market conditions and their loan growth. The real story here might be their ability to manage interest rate changes effectively as shown in their sensitivity analysis. Their net interest margin remains stable, and they are well above capital requirements, indicating a resilient business model. Overall, BANK7 Corp seems to be navigating the financial landscape effectively. So what do you think about BANK7 Corp's financial performance? Are these numbers impressive, or are there deeper issues we should be watching? Let me know your thoughts in the comments below. If you found this deep dive helpful, please give this video a thumbs up and subscribe for more. And don't forget to join our growing community on Discord linked in the description for more finance discussions. Thanks for watching, and we will see you in the next video.